All right, welcome everybody to our Buy Before You Sell webinar. Um, this is going to be recorded, uh, and it is being recorded right now. If you have any questions or anything, we're going to be posting this. If you forget something, we're going to be posting this on our YouTube channel, and everybody who attends is going to get a link to that. So welcome everyone. I am Fairmars Moenzii. I'm here with Marisa Harrison, and we have a special guest with us, Scott Halbrook. He can answer any insurance questions you have on anything. If you do have any questions during this webinar, you can put them in the Q&A at the bottom of the Zoom window. There's a little question mark box that says Q&A. You can type it in there, and we'll keep an eye on that and answer any questions that you guys have. But other than that, I'm going to kick it over to Miss Marisa Verson Harrison, and in 1 second. So real quick about me. Let's see. You can see my screen, Marisa. Is that right?
Muted.
I think she's muted.
Yes, it is. I can see your screen. Yes.
Okay, perfecto. All right. So yeah, a little bit about me. I've been in the mortgage business for over 20 years. Funded over $1.5 billion in loans in that time. A lot, I'd say 70% of my business is in the East Bay. So my office is right on College Avenue in Berkeley. Help thousands of families with financing, and I've got a great team that supports me. Our focus is on service, answering questions, establishing relationships, and taking care of you throughout the transaction, which is why I love working with Scott and Marisa, because they work the same way. So, Marisa, tell us about yourself and take it away.
Okay. So I have been here for 31 years, originally from Chicago. Production numbers top 4% in the Inner East Bay as buyers and sellers. That's not probably something you focus on, but it's in the industry. It's a way we measure our production. I have become a bit of a downsizing specialist, having emptied, dozens of homes from people who've lived there for 52 years, basically doing absolutely everything. Even for one client, we sold her car and they left. There was two of them and they left with just two suitcases. We emptied the house, got it all ready, and sold it. So I'm also supported by a team of experts. We have marketing, escrow, title, trust, photographers, stagers, home prep, handyman. Basically, it's a huge team that works once you sign the agreement. It's that we have a huge team that does this all the time. And Red Oak Realty is women-owned, women-managed, independent, and one of the best in the East Bay.
All right.
So a little bit about why people downsize. It seems like it would be obvious, but having also a mother who's in that age where she did downsize, it takes them a while to realize that this is something that they'll lead a better life with less house. So some of the reasons, retirement or the kids go. That's what I did when my kids went to college. Again, it's a lot less money if you're paying a cleaning lady, a gardener, and then you're keeping your house painted and you have a 3,000 square foot house. It's certainly a lot less money if you end up going to a condo without a yard. And, that is fewer rooms, fewer square feet. A lot of people are leaving the city. I was out at an event today, and it's hard when you are in a place that, there's a lot of crime. And a lot of people, again, want more outdoor space. They want an acre. They want to have a little farm and chickens. And again, to simplify life, it is a lot simpler with less space. Again, condos, townhomes, that's a lot of the stuff that we do. And those people are thrilled to be in, have a little garden rather than a lawn. Again, this is probably the biggest one, a change in health or mobility. We certainly like to avoid before the first fall, because once there's a fall, then it makes those stairs and everything more difficult. And again, home maintenance is one of my favorite quotes. Real estate is not a passive investment. As you know, there's always something to fix. And the big life events, which are death, divorce, disabled, and all the, and then of course having a baby and getting a promotion. So there you go. Those are some of the reasons. And lately, we've found a lot more people moving because of the extreme weather events. The last 2 winters, and then this summer, if you don't have air conditioning, it's been rough. And the flooding from the storms, that our infrastructure has not been updated, and drainage is typically not as foolproof as it needs to be with this kind of weather. Again, we were just talking about with Scott about home insurers dropping people. They're using aerial photography and drones to fly over to check on houses. Again, some safety concerns with crime in certain areas. And basically, with all of those things, the home insurance and then the cost of upkeep for your home, that the total cost of ownership ends up skyrocketing and I'm talking about specifically to the inner East Bay or the Bay Area. So
I
some of
don't
the
see any I don't see any questions right now, but here's the questions that might come up for
No,
people.
that's okay. I got it. I got it. There they go. So basically, people want to know, where will I go? Many of my clients seem to be headed through the tunnel, like Orinda, Walnut Creek, some 55 plus communities, say in Rossmore. Um, Santa Fe, New Mexico has been a big destination. I think there are great communities there. And another one is San Miguel. Allendale, Mexico. I don't know if I said that right, but there seems to be
San
a
Miguel de Allende.
thank you. The other places are like the Sierra foothills. That's where I've seen a lot of my clients going. And that doesn't mean that, that's somewhere you should go, but there's a lot of places that aren't sort of, stodgy retirement places, but actually just easier to live, simplified. And then the people ask, where do they start? Again, for me, what I did is hire an organizer, because it's very, very, very hard to do this on your own. And they can at least give you a framework for sorting through all your belongings. Like, for instance, photos. The only time most people look at all of their photos is when they move. So getting them all scanned, right? So getting all those boxes of photos scanned and viewable digitally is one way to start, right? So hire an organizer. I work with an organizer who comes to my house once a month to help me just get things in order. Um, and when you get through to how do you get excuse me, how do I get rid of all my extra stuff? Again, my organizer knows where to go to donate, even books, donate, recycle things, just takes it away in a car. Goodbye. All leaves my house. All the stuff gets, and anything that can be sold is sold, recycled, and or donated. And then in the end, if you can't find a home for it, it is hauled to the dump appropriately. And will I have to pay more taxes? Most people can, if you're in the state of California, can take advantage of Prop 19. It doesn't mean you won't. It depends on the property you purchase. And will you have to move twice? Again, I sold my house. I sold my house off market and didn't have to move twice. I can't ever imagine doing that. So that is why Fair Mars is going to tell you how you can buy before you sell. Again, a few just tips on decluttering is to make a plan, take inventory, right? First, you inventory all the stuff. You can take pictures of every room and put like things in like places, and usually start room by room. Again, you can get those on the Amazon. You can get those little stickers where you say keep, sell, deno, and ask a friend. Again, I was talking about go digital. Usually, you can for photos and books, seems like the biggest thing that people need to find a home for, and they just can't bear the fact of either throwing them out or somebody not getting them who needs them. Again, there's donating things. There's always people who want your stuff, and then selling stuff on Facebook. Again, I have my organizer do all of that. Find where to donate and finding what to sell. She takes a cut of it and gives me the rest. You want to avoid storage units. Usually storage units are you not making a decision that you need to make. So oftentimes it's like, I don't know, I don't want to get rid of it, but I guess get rid of it. And then the last thing would be, instead of keeping all the stuff, you could create a memory book of your belongings, because that's what people really want. It's the memories they want, not the stuff. So
All right. Those are all amazing tips. And wow, what a great resource you are for people who are in this situation, having gone through it so many times. That's fantastic. I'm going to unpin you
Yep.
and spotlight myself. Let's see. All right. So, how do we do this financially? So, lots of misinformation out there and probably a lot of fear because fear really comes from not knowing things. And so, a lot of the common myths that people think about is that I don't have enough income to qualify. I had a great job. I made a lot of money, but now I'm retired. The only thing I'm getting is Social Security. There's no way I can get a home loan. Getting a loan is difficult. It's complicated. It's going to be a nightmare. There's no inventory out there to purchase. These are all not the case. So my team has specialized in working with people, helping you get your documents together, helping get everything together. You don't necessarily need traditional income to qualify for getting a new loan. So we can create, if you have a trust, there's ways that we could create income for underwriting purposes. If you have a lot of assets, there's ways that we can convert that to income once you're at a certain age. We can use your distributions, either the required minimum distributions or any other things that you're getting. So there's a lot of creative ways to get it done, and it doesn't have to be super complicated. And Marisa will show you there's plenty of great inventory, especially now. We're in a really great window right now. So what's the benefit of buying before you sell? Well, if you can leave your house and turn it over to a great realtor like Marisa, then you're going to get significantly more for your house than if you try to live through the sale. Living through the sale is difficult. People can't just pop into your house on their schedule. They have to work it around your schedule. You have all of your stuff there instead of having it staged and showing the potential and allowing someone to imagine living in it. And the NAR says that your sale price goes up by 4 to 7% on average when you can leave your house and turn it over to an agent. We can close quickly on your new house, but the transition's up to you. You don't have to bug out and leave and all that stuff. So you can own the second house and move at your pace. The financing tools that we set up allow you to make very compelling offers, not a contingent offer that says I have to sell my house before I can close on this one. No storage, no moving twice, and you can give your realtor plenty of time to prep and stage your departing residence. So these are all huge benefits of buying first before you sell your departing residence. So how do we do it financially? Well, there's a couple of different ways to go. We can get a home equity line on your house if you have a lot of equity and use that as a down payment. There are conventional loans that uh, facilitate this transition financially. If you somehow don't qualify for a traditional conventional loan, there's a category of loans called non-QM, non-qualified mortgages, which let us go outside the box of traditional underwriting and allow us to maybe just look at the new house, maybe use sources of income, and maybe go higher in the debt to income ratio. So there's that. And we also have access to private capital if we just have to get a bridge loan, right? So what do these look like? Well, if you have your house here, let's say it's worth 1.5 and you've got a mortgage of 300,000 on it, okay? So we want to depart this residence and we want to buy a new house over there for $1,200,000, and we need a $240,000 down payment. We can get a $240,000 second loan on our departing residence, which is this home equity line of credit, use that as a down payment on the new house and get a $960,000 conventional loan. Then the total that we're going to owe on our departing residence is going to be 540. We sell our departing residence and we can take that $1,000,000 and either just pay off the new loan altogether or get us back down to that $300,000 mortgage that we left behind. So a lot of options in the execution and the transition, right? So a home equity line is based on your home equity, just like the name says. If you don't have any equity, this isn't a good option for us. So if we have either no loan on the property or if we have a very small loan on the property, we can get a home equity line in place. It requires usually a 680 or higher credit score. We're looking at the value of the property. and the closing costs can be bundled in if there are any at all. So what we do then is we close on the new house, move at your pace, list your departing residents, and sell it, right? So like I said before, we sell it for $1.5 million. We pay off our loans, we pay down the loan, and we end up with $100,000 loan on our new home, right? So it's a way to transition. Now, the benefits of the home equity line, very low cost, generally zero cost. We do home equity lines at our company, but the only thing that we do are mortgages. So we can't afford to lose money on any of the transactions that we do because it's our singular line of business, it's our singular focus. So we would have to charge you for the appraisal, title, and escrow. I do have referrals. I work with a couple of great local banks that will do home equity lines for free, and they have great terms. So they will pay for the title, the escrow, the appraisal. It costs you nothing to get it. And the reason they do that is they want to establish a relationship with you down the road of hopefully, checking and savings and credit cards and auto loans and things like that. But getting the actual home equity line is free. The the timing is the issue, right? So while the home equity line is a better interest rate than a bridge loan, you need to have some lead time. So this is why we say the earlier you get with Marisa and I and start talking about these options, the better. Generally, the banks take somewhere around a month or two to put the home equity line in place. So if you've seen a place that you love this weekend that's taking offers on Wednesdays, this isn't really an option anymore. And you have to fully qualify for all the loans. So the home equity line company, they follow traditional lending guidelines, and I can help you create a file that is strong from the income side and everything, but and we'll walk you through it even though we're not doing the loan. If we can't get a home equity line because of timing or qualifications or something like that, then the next option is the bridge loan, okay? And there's a couple of different types of bridge loans here. So the type that we're showing here is based on the combined value of the two homes. So once again, we own a house that's worth 1.5. We have a 300K mortgage on it. We want to buy a house that's 1.2. The combined value of these two homes is 2.7 million. And the bridge loan will add the value of the two homes together and go up to usually about 70% of the value of the two homes together. So we have plenty here to get all of the cash that we need to make this $1.2 million purchase here. So we put a lien on both properties. We get you $1.2 million. You make essentially what amounts to an all cash offer on your new house, and you move in. Close on your new house, move in at your pace, list your departing residents, and once you sell it, you'll sell it for 1.5, apply the $1.4 million to the net bridge loan because we paid off your other mortgage, and you end up with about $160,000 loan on your new home. I'm going through all this stuff really quickly because there's a lot of details in here, and I would you'd be sleeping before I was done with that. So this is just to give you like a quick overview of what it looks like. We can specifically create exact numbers for your specific situation. So the benefits of a bridge loan, it's very fast. You can buy within 48 hours. Once I have your addresses in the system, we can get an immediate qualification based on just the value of the homes. We're not looking at your income and all that. It's just the value of the homes. Very low documentation. We can close the whole transaction in 14 days, like all of our transactions. And there's no monthly payments in the interim. The monthly payments are coming from the payoff of the loan that you're leaving behind, right? So when you sell your house, they're going to add up how much you borrowed, any interest that was accrued, and that'll be your total payoff once you sell your departing residence. The negative is the cost. So a bridge loan can cost you anywhere between 2 and 3 points, depending on which product we use. And the reason is that because they know that it's going to be a quick turn on the payoff, they're not really interested in a long-term interest-bearing type of payment situation. They make all their money on just churning the money. So getting a $1.2 million bridge loan could cost anywhere from $25,000 to $35,000 just in the fees. And then the interest rate while you have it in place is higher too than a standard loan, somewhere around 9.5 to 10.5%. So it's costly, but when we put it side by side with the comparison of selling first and then moving, it actually does start to pencil out. So the main benefits are you eliminate the stress of moving twice, putting your stuff in storage, moving to an Airbnb while you list your house, renting indefinitely. You don't know when you're going to find your next property, damaging the marketability of your house while you're living there. Um, and and when you put all of these things and add it side by side next to them, it really does seem to add up to that same 2.5 to 3 points that you're paying for the bridge loan. So I'm happy to answer any questions anybody has on that. I don't see any. So we've got on here with us Scott Halbrook. Scott's from Farmers Insurance right here in Oakland. His office is right next to Montclair. And he is a great resource. He's been doing this for 20 years. I've known him for ages. And some questions that have come up, recently, Scott, with the, whole insurance challenges and stuff is, well, first of all, why don't you give us a background and say why we're even having challenges in the insurance business in California right now?
Um, well, in a nutshell, the issues in California have been coming at the insurance industry for a long time. The wildfire effects, the effects of the wildfires over the last 15 years have caught up to the insurance companies in many ways. I'm happy to get into the weeds with anybody, maybe outside of this call, but the other factors for insurance, property insurance in California, and this is pretty much broad, is older homes, older pipes have become kind of an ongoing problem. So older plumbing is certainly something that's very sensitive to insurance companies. Um,
For someone who's looking to sell their home, let's say they haven't upgraded their electrical and it's knob and tube wiring, is that
yeah,
something they have to do to help the next
yeah. So
buyer get
that's a great
insurance?
question. So there is nobody at all at this point who's willing to knowingly, if they knowingly know that there's knob and tube wiring, they will not issue a policy. So having that dealt with and removed is a very smart thing to do. The other thing would be to as an owner of a property going on the market, and if the roof is say 30, 35, 40 years old, um, certainly wood shake you want to replace it, and if you can. It's going to make it more palatable for a lot of insurance companies to issue a policy on a roof that is very, very old, difficult.
If you've made a claim on your property for, let's say somebody drove into your fence or something, and you made a property claim, does that make it uninsurable for the or harder to insure for the next buyer?
That's a great example, and that example is typically no, because that's not something that the property owner had any control over,
Okay.
right? The problems can be sometimes the claims follow the owner. So that owner that maybe had a couple of small theft claims over a couple year period, or maybe a water claim and a theft claim, and they're trying to move, they may have difficulty finding insurance on the new property because of their claims history that almost in a way they kind of made those claims, those small claims.
Mm,
If water is very, very sensitive to the property itself, because typically when a water claim happens, it sets up the possibility, the higher possibility that it's going to continue to happen on a home that's got a 6-year-old set of pipes. And when a claim happens, it's a band-aid, right? They fix that section of the house, but the rest of the house has still got that 60, 70-year-old set of pipes.
got
So
it.
that's insurance companies are very, very sensitive to that.
So water things might stay with the property versus some other things might go with the owner.
Yeah,
Okay.
yeah. Um,
So then back to our example here. These are some great examples that you had brought up. What if I've just, so we're talking about, buying your next house, move at your pace, do decluttering with Marisa, do all these things. and she might advise someone that it's not the right time to go on the market. It's Thanksgiving all of a sudden, and we should wait till the spring. So, what about on the insurance side? If I've closed on a house in October or November, but my plan is to not really sell my departing residence for another 6 months.
Um, my honest advice is to for the owner of that property, hopefully they have a relationship with their insurance broker or agent, right? But have an honest conversation about here's the situation. We have moved out. It's going to be having some light work done on it, and we're hoping to put it on the market in 4 months, 6 months. Insurance companies' policies are contracts that have parameters to them. And if a home has a claim where the house is known to be vacant, somebody's living in Europe for 6 months and the house is not inhabited, or they've moved out because they're moving and they've moved and the house is being worked on for 6 months. That is not an owner occupied property. And there are companies that will pretty much come down and say, look, we're not going to cover the claim because this isn't insured properly for the use. Companies understand that houses turn over and that people can be moving out for 60 days, 90 days and having some work done. That's kind of understood, but I would highly recommend that they have a conversation with their company, their agent, their broker, to understand what is their company's particular parameters for that and address it. If you know it's going to be 6 months, yet the coverage is only going to be there for 90 days or 60 days like that, then consider rewriting the policy to a vacant policy. So a policy that's designed for a property that nobody lives in. That's the proper thing to do, to dot the I's and cross the T's.
So yeah, so if somebody's working on your house and all of a sudden they trip and fall, or if they damage something or set something on fire, you want to
You're
make sure.
vulnerable.
Yeah,
Homes that are vacant or empty are vulnerable to all kinds of claims.
yeah.
They just are more. We know it from an industry. We understand why. The numbers on how often this stuff happens with a property that is not lived in. So
Got
that
it.
that'd be my advice.
Well, that's a perfect transition here because after you move out, Marisa's gonna roll in with her team, and you have a product, Marisa, that what if somebody says, "Look, I don't have a bunch of money to uh, I don't have a bunch of money here to fix up my house or something like that." Like, tell us about your enhanced product.
Okay, and I don't know why I don't see your slide deck anymore, but I will. So Enhance is a program where we basically use the equity in your home. You qualify for a loan, but it essentially gets paid back through you take the money out of escrow. So we do all the work and you don't pay until the end and they take the money out of escrow instead of, paying as you go. Sometimes people want they have the means to pay cash, but this is a really great program for those who are like, I need to take a knob and tube out, for instance, some of that structural work, if they need a new roof. Those are things where we're like, you can't close escrow without those things in order. The other thing is just if you haven't had it painting, people are really surprised at how much the cost of paint is these days. And again, anything that you'll need
So,
scaffolding for. So
so I was
the
gonna say, I don't know if you can see the slide now, but these are some pretty compelling
oh,
statistics here that homes that have undergone your enhanced treatment receive 30% more offers, sell 9% more over list price, and sell 9% faster than homes that have not.
yeah. So why don't you so I don't know why I can't see it. So
I
that's
think it's
just
probably hidden on your screen here. Let me see. You have another window open somewhere on your computer?
entirely possible. So let me
Click
check.
on, see if there's a little window that says Zoom or something.
Okay. Let me check in my Zoom. I don't, but I have it here. I have it next to me. So
Here, I'm going to
that's
stop and I'm going to reshare. And I bet you it'll
okay.
pop up for you. Hang on.
There we go. There it
How's
is.
that?
Okay. So you did this slide, right? You already talked about this?
Yeah. Now, how about
Okay.
this one?
Okay. Basically, the benefits, these are stats that, you know, staged, basically, vacant and staged homes will sell at the highest possible price. And also they'll be on the market for less time. So 53% of agents stated, basically give that stats. 92% of buyers agents report that their clients are affected by the staging. They absolutely are. And not all staging is equal by far. And buyers say it's easy to see the property. You don't want to see other people's stuff. You want to see potential and you want to see your life in this new house. So
Right.
we have to make it innocuous and clean. And basically, it's you want to give them the vessel to project their future life.
Speaking of
And
which, look at some of these examples. I cannot believe these. So walk us through these stories here.
Sure. This was a house in Alameda. Believe it or not, the father had died in the house, and it was a year afterwards. So the
Wow.
sons came, and you could see they had dogs that had just ripped up everything. And, I mean, I've never seen a house in such disarray, frankly. So believe it or not, we in 3 weeks for 125,000, and this was a five-bedroom
This is
house.
3 weeks later?
Correct.
No way.
Yes, it is. Yes,
Wow.
3 weeks. And you can see it's entirely different. I think we got rid of one of the cans of food was from 1993.
Send it to the Smithsonian.
Yeah, yeah, yeah. And just you can see the total difference that it makes. And we used our stager there was a woman named Visual Jill who uses local artists. And it sold for $375,000 over asking at
Amazing. How about
2.175.
how about this one?
Yeah, this one again, it was a house where the owner lived there, air quotes, but not really, and there was a tenant downstairs. So it was, I mean, ignored at the best of times, and they did a lot of their own work when they added a bathroom. So we did that one took about also 3 weeks, and we
Wow,
turned it
look at
into
that.
this. And again, the downstairs, the tenant downstairs, I mean, I can't even begin to tell you the things I saw in that house. And now it looks beautiful. Those windows are amazing. And that one sold for, I think it was late last year, and that was California Fair Plan. So that one actually took longer to close escrow because of the home insurance. But I mean, and that's also visual Jill staging, and you can see it looks like they're in the forest and that it's a museum.
Oh, it's completely modernized. Yeah, it's
Yeah.
incredible.
Yeah. And that's the same house.
It's the
That's
same one, yeah.
Conrad. Yeah, that's in Montclair.
So, Scott, on California Fair Plan, that only covers fire protection, right?
Uh, yes and no. I mean, that's kind of a misnomer in the press. The FAIR plan covers wind, fire, and vandalism. Okay,
Okay.
so vandalism's kind of rare, right? But it's wind and fire. And then the property owner needs to get what's called a wraparound or a difference in conditions policy that gives the property, the owner's liability, theft coverage, water coverage in a couple different ways.
All the other stuff that usually comes with your standard
Yeah,
homeowners
yeah.
package.
It's
Okay.
it's
And
it's kind of a
what about the timing on this? I know that I've had some fair plan with you and you've got it done really quickly, but I've also heard that for some people it takes 3 or 4 weeks to get it done.
the what it seems like in our office, and I am doing almost exclusively fair plan these days as far as new business that I'm writing. But what what seems to have happened about 2 3 weeks ago is that they pushed a button and all the backlog is gone. And I
That's
think the
great.
pressure from the state has come down on them to get through it and get these policies issued. This the so we're not having any of those issues.
That's
And
great to hear. Yeah, I know a couple months ago I was getting a lot more of that, but I haven't heard of it recently. So it's good to know that it's gone.
yeah, it's pretty
But
quick.
so I would just say, remember, this was 11 Conrad, Lower Montclair. This at the time it was November, and somehow they were rolling out a new system, a technology system, and
Oh
Uh,
yeah, that was a
they
nightmare.
lost all the applications.
Yep,
uh,
yep.
Also, this is one where basically they had to get a roof inspector to go out and inspect the roof before they could get insurance as well. And then they had to have a wraparound plan as well.
Yeah.
So I don't know, it may change day by day, but the insurance thing, whatever it
Yeah, it
is
sounds like on
today,
this particular
Well,
transaction, it was wrong
that
place, wrong time. Yeah,
that
they
right.
still got it
IT
done.
change that they made was a disaster.
Yeah.
When everything was kind of coming at them. That's all. It's all smooth now. It has
All right.
been for a while.
Cool. So Marisa, this is great. I mean, it's amazing what you can do with these houses. So now, one of the questions we had, one of the myths is there's no inventory. So I know you sent me some. I mean, these are actually places that are available right now, right?
Yep. Yes, this one is in Alameda. Again, a lot of people love Alameda, Bay Farm Island or Harbor
No
Bay.
stairs.
No stairs. What they don't realize is again, there it's on liquefaction, the properties, but people seem to think it's air quotes safe over there and really like a lot of people. I have somebody I play pickleball with. She wants to move over there. She's got a house in Oakland. Again, safe. It's removed from everywhere. Also, so for this is $799. You get a 2 bed, 2 bath, about 1,500 square feet, but also it comes with all these amenities like a pool and pickleball. And and again the walking trails, if you haven't been out there, it does feel like a self-contained community, a very, it seems far away from everything
Yeah,
else.
when you go, it seems like when you go over that bridge, it's like you're in Kansas or something.
Yeah, like
Yeah,
the Truman Show. It's
yeah,
like
totally. What about
so
this one? This one's like talk about
I mean,
walking. You're right next to Lake Merritt and everything here, right?
again, this is the Kelton Court. We have one of the Red Oak agents who lives there. It's such a beautiful gorge. I have friends who live in that building. It's, it's couldn't be more central to everything, walkable shops, food, restaurants, and the view. It's incredible. So this is if you want to take care of less space, 677 square feet,
Wow.
right? And I think that it's a beautiful building. There's a lot of community involved because there's not too many units in the building. Like it's not one of those enormous condo projects. So, and that HOA fee is low compared to many of the HOA fees. So this one it doesn't have the pool, the pickleball court, but it's got location, location, location.
Yeah, I'm sure you could walk to some kind of pickleball somewhere.
Yeah, everywhere.
Um, and then what is this one a house?
Yes, and it's
Yeah.
adorable. And it's in Lower Montclair. And it's a 2 bed, 1 bath, but it had all the upgrades, right? So that's a little more square feet, 1,084, and it had everything upgraded, very high end, super, it's level in, level out, easy to take care of, also walkable, right? It's not as walkable as, and again, we can't even say walkable, convenient access to shops and restaurants, and to have something this small and adorable with that yard in Montclair is just amazing. And again, you get 2 bedrooms, so it's not like you have to look at your partner all the time. You can always walk out.
And what about when people say, "Oh, okay, 925, what does that mean? Like I have to offer 1,600,000 to get it? Like what's going on right now in the market
Now, right
from
now, I said it's a good time to be a buyer. I think that this particular house is sort of a gem, sort of a unicorn. But with most properties, and again, because this house also has a lot of upgrades in it, but that's kind of a high price for that for 1,000 square feet. It's going to depend on, it's usually there are generalities and then there's that one property everybody wants,
right,
right? So the
right.
condos, it's a fire sale. That's unbelievable.
So if you want a condo, now's the time to get a condo.
Now is the time to get a condo. You have your choice. Everyone will negotiate. I just have a feeling this one was, I think it was on just 2 days on the market when I saw it. And it's not going to go for, I don't think it's going to that far over asking, but I think I have my spidey sense says this one will go around 1 million.
Got it. But not like, it was in 2021 where
No, not at all. Not at all.
into the millions. Yeah. That's great. That's great. So we've covered a lot of great information here, and thank you for all that. So if someone wants to think about buying before selling, what are the next steps here?
Well, we can just schedule a time to talk and come see your current home. I could walk through it and quickly see, what stuff. I mean, again, I wouldn't do the proposal right away, but we would say, okay, we then get, you decide who you know, like, and trust. That's the most important thing because it's a long walk to the close of escrow. It usually takes 4 to 6 months for the whole process. People don't realize how much time it takes. Because again, some of the home improvements people don't really do during the winter. And so we have everything that we've done planned for my listings. We've been working on for the last 2 months on 2 listings I have coming out in Montclair in January or February. Anyway, you schedule an appointment with me and you can see if we vibe. Then you, of course, talk to Fairmars to talk about how you're going to finance the move. And then basically you start imagining a new deal. But first, we probably have to thin out your stuff. That's what I would say.
Yeah, so
Somewhere.
yeah, you've got the decluttering, you've got all that, you've got the
Yeah.
financials. So, and meeting with me, I'm happy to meet with you in person at my office in Berkeley. I'm happy to meet on Zoom if that's more convenient. If there are other stakeholders, like other family members, kids, financial planners, or anything like that, oftentimes at this stage of someone's life, we'll have more of a team meeting to talk about how to execute on this financially. So all of those things are possible.
I want to say one more thing, Fairmars. In 2021, I made a move from a 3,500 square foot house to the 1,725 square house. I didn't know about this option. And so I knew I left probably 500 grand on the table. But the
Wow.
currency of not having to do the work and not having to move twice was that valuable to me. If you live in a place for 20 to 50 years, which is usually what the people we talk to are doing here, it's an enormous emotional task. So
Yeah,
to have this ability to know where you're going to be, a sense of surety is, I'm just saying, it's worth a lot.
it's worth everything. All right. Well, thank you for attending. And like I said, if you have any questions about anything, our contact information is up here. Scott, thank you so much for joining us. The insurance information was super valuable.
Did you ask Fairmers if anyone had any questions?
I did. There are no
Okay.
questions in there.
Okay.
All right. All right, you guys. Have a great day. Enjoy the rest of your Sunday.